friends, I've been shopping. Check it out. Not that kind of shopping. Let's see what's really in here. This kind of shopping. Google. This is a pouch from Google. I wonder what's inside of this thing. Let's see. Of course, money. Money is in here. This is money that represents Google's dividend stream that I believe will grow over time. The parent company of Google, Alphabet, is the newest position in my personal dividend stock portfolio. As you can see on the screen in front of you right now, here are the 3 most recent tranches that I purchased. You can see, of course, that the share price is going down. Actually, let's face it, it's tanking. And so I have been buying this stock at progressively lower prices over time. Let's also take a look at the fact right now that the forward PE on a 2025 basis is an 18.43, and the forward PE on a 2026 basis is a 16.16. These are value levels. Sometimes as investors, we look at 2 types of stocks. We look at those value stocks, core dividend value stocks that I cover here all the time. A lot of those stocks, by the way, are surging in price right now. We look at other stocks that are high growth tech stocks. A lot of those stocks, like Alphabet, are tanking right now. But just because something is a tech stock does not mean that it's not a value. I see a lot of value right now with Alphabet. In fact, I see probably for my personal situation, the most value with this stock based on where it's trading right now. I think this forward PE of a 16, it is just a deep value in my opinion. And my patrons know, I'll link to my Patreon in the pinned comment below. I've been buying some Alphabet to diversify my portfolio, which has a ton of those core blue chip dividend stocks, but not a lot of tech. And I love buying tech when it's selling on sale. So let's go through the analysis today. A lot of you have been asking me, Ian, can you go through some fundamental analysis, balance sheets, income statements, cash flow statements? That's what I'm going to do. I actually want to start though with the income statement. Check it out on the screen in front of you right now. This is from their recent earnings report. Alphabet's recent earnings report, it shows the income statement. And this is for the year ended December 31st, 2024. And it compares it to the prior year in 2023. It also has the fourth quarter, but I like looking at things in terms of an entire year. It's going to give us a little more insight as to what's going on. What I do here is I add in a few extra columns because I want to look, how is this company growing right now? What is happening with this company? Is it flatlining? Is it stagnating? Is it decelerating? Oh boy, I don't think so. Look at this. Revenue, when I compare 2024 versus 2023, top line revenue is up 13.9%. Now here's where things get even more exciting. Even though the revenue is growing, it is not costing them that much incrementally to grow the revenue. Costs and expenses are only up 6.5%, so they're up less than revenue. Top line is outpacing the cost of producing that revenue. When I look at net income, it is just astounding. It's up 35.7% year over year. Yes, let me repeat that. This stock on a forward basis is trading at a PE of 16 for 2026, yet they're growing the net income in excess of 35% year over year when I compare 2024 versus 2023. See, when I look at price earnings multiples, they typically are not this low for a company that is growing very quickly. Typically, a PE of 16 might be for a very high quality company that's barely growing at all, but it's really good quality. It has a good moat. It's defensible. It's a great company. But this is a great company with all of those kind of things, but it's growing. And so the PE of 16 does not make a lot of sense to me, but let's keep going. As you can see on the screen in front of you right now, what I also want to point out next is the diluted EPS. So they've been reducing share count and they've been doing a lot of share buybacks. And so the diluted shares are actually down 2.21% year over year. And that's why the diluted EPS is up even more than net income. The diluted EPS is up 38.6% year over year. And so this is a company clearly that is growing very quickly. And I believe they will continue to do so. But let's keep going. I don't even want to look at what they're doing, what the business does. I don't want to look at what widgets are they producing, what lines of business are they in. Let's just look at the numbers, because the numbers really, for me as a fundamental investor, tell pretty much the whole story. But let's keep going. As you can see on the screen in front of you right now, let's look at the cash flows. And so cash flows tell us a whole lot as well. First and foremost, you can see at the top of the screen, again, I have their cash flows kind of on the left, my notes and my numbers on the right. One thing I do want to point out that is not encapsulated on the last slide on the income statement is stock-based compensation. And the expense of stock-based compensation, it's pretty real. It's like in excess of $22 billion per year. This is a lot of money. And so it's something to monitor. Thankfully, it's within a range and it's not jumping too much year over year, but it's something to monitor. But this is why I think the EPS on the last slide, maybe it's overstating their growth a little bit, because that EPS doesn't really include the expense of the stock-based compensation expense, which does show up here on cash flows. But net cash provided by operating activities, when we really look at that, boy, it is out of this world still. It's growing 23.15% year over year. And I think perhaps this is a better metric than net income. Let's keep going though. As you can see next under investing activities, take a look. There is a lot of CapEx happening right now, and there will be even more in 2025. They are preparing for AI. They are making some big capital expenditures in servers, in technology related to AI. And you can see it was $52 billion in 2024, and that was up from $32 billion in 2023. And so this is actually a number that I think is spooking some investors. They're looking at this and they're like, hey, CapEx, it's going up a lot. But I think we're at an inflection point right now in history. And that inflection point is really around these big companies making investments in AI. And we just saw that Alphabet is bringing through about $125 billion a year and growing in operating cash flows. They're using some of their cash flows to invest for the future in CapEx, and they're making investments that will help them be a leader in AI, if not the leader. And what I love about Alphabet is they have the scale, and they have so much cash flow coming through that for me, it's kind of a game of how can they lose at AI with that kind of money coming through and with the investments that they're making? I look at it as a positive thing, but I think the stock is down a little bit because we're facing a tech correction, but also Wall Street, they're a little worried about the huge CapEx at Alphabet. But let's keep going. As you can see on the screen in front of you right now, I want to keep going on the cash flows. And so as we go down, you can see under financing activities, repurchases of stock. They're repurchasing about 62 billion of stock a year. And that's why we saw on the first slide, when I was looking at the income statement, that shares were basically going down year over year. It's because they're making these huge stock repurchases. Now, of course, they're also issuing stock through stock-based compensation. And so they cancel out each other a little bit, but net, they're reducing the amount of stock outstanding. And we saw, again, on the income statement, when I compared year over year, diluted shares were down about 2.21%. You can also see on there, which is really neat, now they're paying a dividend. And so 7.3 billion or so going towards dividends in 2024. And hopefully that will only increase over time. Look, I invest for cash flow. And yes, I'm buying Alphabet here with a starting yield that's very low. And it will not pay me any meaningful cash flow for a while. But I buy it because I see value and because I think they're going to grow the dividend over time. The numbers support that for certain. And so I want to go on to the balance sheet next. As you can see on the screen in front of you right now, the last slide that I have today is the balance sheet. And what you can see there basically is a very pristine balance sheet. Oh my goodness. And so again, I got just a few notes. The first note that I have is around property and equipment net. And so their property and equipment is up. Why is it up? They are buying a lot of NVIDIA chips and servers and infrastructure to prepare and to be the best, hopefully, at AI and other future innovations. And so that's why their assets are up from 402 billion to 450 billion. It really is a function of the CapEx, which is in property and equipment. The next thing that I want to point out is on the debt side. Long-term debt, I only have about $10.8 billion. And so we know, again, from a cash flow standpoint, that they're cash flowing from operations about $125 billion a year. And on a balance sheet perspective, they basically have next to no debt. And so this is a beautiful company from a numbers perspective. When I start out with just the income statement, cash flow statement, balance sheet, it is really a work of art, if you will, and it's trading at a bargain basement price right now in terms of the PE ratio. I could see this stock appreciating quite a bit in price over the years. I think there are some concerns right now about where they stand in terms of the future, in terms of AI. Will it be winner takes all? Will they not be a winner? Maybe they are not the company that captures the lion's share of the market when it comes to AI. I think there are concerns about that. I think there are also concerns about the future of Google search. Will consumers continue to search on Google? Will they opt for other new technologies instead? Will it be a little bit of both? My investment thesis at this point is that this world is changing quickly, but I think that Google will continue to do very well in the marketplace. Remember, it's not just Google search. They have YouTube, the very platform that I'm on right now. Remember that they have Waymo, which is an autonomous driverless vehicle that they are running in the real world right now. They are basically, to my knowledge, like the first to market to really capitalize on this new innovation. And to my understanding, that's not really factored in to the valuation of the company too much at all right now. And with the amount of cash flow that's coming through, with the investments that they're making, I think the future is pretty bright for Alphabet. And I am proud to own it, especially being a YouTuber. I spend so much time on YouTube. I have to own a piece of this thing. Again, there's two buckets of stocks. We see the value stocks surging in price right now. We see the tech stocks correcting. But it's possible to find value within tech. That's what I see at Alphabet. If you enjoyed the video today, please go ahead and click the like button. And please share in the comments below what you think about Alphabet, if you're buying any Alphabet stock or any other stocks right now that are tanking in price. Because who knows, this thing may go down further. I don't know. I'm just going to keep averaging in over time. Now, also, I want to please invite you to subscribe to my channel. I have new videos all the time. Before I go today, in terms of a friendly disclaimer, this is not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market. Before you make any investing decisions, please consult your licensed financial advisor first. I'm just sharing my journey. I'm not offering any kind of stock or investment advice. Also, in terms of a full disclosure, I am long Google or Alphabet, ticker GOOGL. I have all my disclaimers, as always, in the video description as well. Thank you for watching. I'll see you in the comments below, and I'll see you in the next dividend stock investing video.